እንኳን ደህና መጣችሁ ለሪል ስቴት ቲ ቶክ ኤፒሶድ 13 can you believe it? Oh my god በጣም ነው የምናመሰግነው ዛሬ ስለተገናኘ ከጓደኛዬ ጋር ሄርሜላ እኔ ደራሰ ሃያስ ነኝ። ይሄንን ዛሬ ደግሞ ያመጣንላችሁ እንግዳ አለን። ስለ ክሬዲት ሪፔር ነው ብዙ የምናወራው። ስለዚህ እንኳን ለዚህ ቀን አደረሰን።
ሰላም ሄርሜላ ባልቻ ነኝ ከባልቻ ግሩፕ በዲሲ ሜሪላንድ ቨርጂኒያ አካባቢ ሪል ስቴት ኤጀንት በ38 ስቴት ደግሞ ወኪሎች አሉን። የትም ስቴት መግዛት ከፈለጋችሁ ልናገናኛችሁ የምንችለው ዛሬ ስለ ክሬዲት ስኮር ክሬዲት ሪፔር ይህ ሁሉ ስለ ቤት ግዢ ፕሮሰስ ላይ ዋና ሳብጀክቱን ነው የምናወራችሁ። So
we have Brian Bracey from AMT Capital በጣም ከሱ ጋር ብዙ ሰርተናል። ደግሞ ክሬዲት ሪፔር ያደርጋል። So Brian, welcome, and we're really excited to have you here. And when we talk about sometimes buyers are ready to buy, but then they find out there's a credit damage. Maybe a credit bill came in. And that's where I know we have worked with you, and so we've worked with you with some of our clients to help them repair that. But please introduce yourself, and we'll get into the topics a little bit.
Hermela, D, thank you for having me. Excited to be here. So I'm originally from the DC, Maryland, Virginia area. Grew up in Peabody County. Okay. Moved around a little bit after high school, but decided to come back to this area. We had run a credit repair agency. I think we focus on credit restoration, business lending, as well as consumer advocacy. Been doing that for about 5 years now.
Can you tell us, just to start, right, what are the top 3 things that people do that really may have had an 800 credit score that kind of takes them out of maybe even being able to buy a home? Can you tell us a little bit about that?
Yeah, absolutely. I think, the main thing is not putting things on auto pay. When we don't do that, we tend to get late payments. And if you know anything about the credit score, the number one thing is going to be that payment history, right? So that's worth 35%. So when we get a late payment, clients often see, 45 to 60 point decrease in their scores. So obviously that's going to take them out of the running to be approved for a home, right? So I think it's that. I think it's, co-signing for others. You can't control if that person's going to pay. Right. So you're putting your credit at risk in order to help somebody. I get it. Most times it's family, but we can't control when somebody else is going to pay their bills. Right. So it's that it's the late payments. Outside of that, it's just not having a good view on what's actually on your reports. Right. So sometimes there's issues, a lot of times with the credit reporting agencies, you have a lot of data that you're trying to manage, right? So they're managing consumer reports for millions of people. And so if there is, maybe there's a misspelled name, maybe there's an address that's old and outdated, that information hinders your report as well.
So first, let's talk about most people when they call us and we're having a conversation and we ask them, what's your credit score? They'll be like, oh, my bank's credit score says X. And then when they apply for a mortgage, their score is a lot less. So can you explain why that is?
Yeah. So most banks are using a Vantage scoring model. So if you're looking at your credit score in an app, it's probably a Vantage scoring model. Now, there's also the FICO, which I would say majority of lenders use. It's really the standard for credit reporting. Okay. And so the difference between those two scoring models usually is about 15 to 20 points. I always tell clients to focus on the FICO. Most banks are going to use that. Creditors are going to use that to approve you. But the biggest difference is usually there is the payment history and then there's the utilization. They value those aspects of your credit score differently.
The mortgage companies.
Yes.
Can you elaborate on Advantage score model?
Yeah. So Vantage, it was created by the credit reporting agency. So that was a scoring model that Experian, Equifax, and TransUnion came up with. Okay. At the end of the day, it's really about the data that they're collecting. But again, you want to focus on having that FICO scoring model. You want to know what those scores are. And a way to pull that, I mean, you guys have access to that as well, but, focus on that. I believe it's a FICO 3, 4, and 5 for the mortgage scores. You want to make sure that, you don't have any late payments. You don't have any derogatory items that are on there, maybe in terms of collections or in terms of charge-offs.
Okay. The other thing that I hear the most is But when I bought a car, I was approved without a problem. But why am I not getting approved when I'm trying to get a house?
Right.
So can you tell us how the car people look at it and the mortgage people look at it?
Yep. So with cars, there's an auto FICO score for that as well, right? So we have a culmination of about 25 different FICO scores. So you have it for the bank cards, kind of have your base, FICO 8. You have one for mortgages. You have one for auto loans, right? And they created, I wouldn't say within the last year or so, FICO 10 and FICO 10T. It's basically a trended score of your habits for the last 2 years, right? So it really depends on which FICO scoring model they're using, right? You can get approved for an auto loan, but also their thresholds tend to be a little bit lower for an auto loan versus an actual mortgage.
Gotcha.
So, question. So somebody now is ready to buy, but they find out they have a 580 or 550, a score below where they cannot get a loan. We introduce them to you. Can you take us through the steps you take them through to kind of get their credits improved?
Absolutely. Absolutely. So the first thing that we want to do is have a consultation, right? We want to talk with the clients to see, what their motivations are, what issues they've had in the past. Maybe there are some patterns that we can kind of sift out to find out why they're in this position, right? Once we go through that initial consultation, we'll also look at their credit report from top to bottom. We want to make sure that, again, it's that personal information that I mentioned earlier, the names, make sure that checks out, make sure that they don't have any misspelled names. We want to look at the addresses, make sure that, you only have one data point for these fields, right? You only want to have one address, one name. If you want your employer information on there, you can keep it on there, but make sure we have one data point. And then we're going to do an audit of every account that they have on the credit report, right? So we're looking for the discrepancies in the reporting. We're looking for those negative items, whether it's a charge off or a collection, whether it's a late payment, inquiries that they need to be removed. But we want to do a full audit of that. And then from there, if everything checks out, we're a good fit for them. They're a good fit for us. We want to go ahead and get them onboarded to start the process. And our process really entails disputing negative items based on factual inaccuracies, right? So Fair Credit Reporting Act says that everything that's on your report needs to be 100% accurate. Now, we know that that's not the case because otherwise people wouldn't have issues with their credit. But also, as I mentioned before, there are millions of consumers files that these agencies are trying to manage, right? So there's bound to be errors. And so once we have a good indication of, okay, we know what's on there, we know how to attack it, and then we want to go ahead and get the client onboarded and start attacking these negative items. Now, we operate on about a 35-day cadence. It's really just because the credit reporting agencies legally have 30 days to do an investigation, right? So it's much of an iterative process as we go through credit repair. But, as those items start to fall off, based on how we challenge those items and based on just being able to highlight those factual inaccuracies, then obviously that score is going to go up, and then we can send them back to you guys so that they can get approved.
So does your cost change based on the severity of the issue?
Absolutely. Absolutely. We tend to take a percentage of the total negative debt and the negative items that they have on the report. I would say on average, it varies between 500 and 1500. Again, 1500 is going to be on the higher end for someone that may have multiple charge-off, multiple collections. And, in some instances, people have bankruptcies. But, if you only have one negative item, you have a couple inquiries that you need to get cleaned up, you'll definitely be on the lower end.
Okay. So based on what you just said, someone that has a couple of items that needs to be cleaned up or whatever, like what is the time frame that you would say for a simple project and a severe project?
Yeah, very, very good question. I get that a lot from clients. Timeline is going to vary from client to client. We don't give a guaranteed time frame only because it's actually illegal to do so. So let's say I told a client, we'll be done in 2 months. And that's not the case. They could actually report that not going to lose no license, right? You have to have licensure to actually operate in this space, right? Just like you all.
Yeah.
And so we tend to give averages just based on the clients that are in the portfolio, what we've experienced. A client may have a similar profile. We can give an average, but we don't give a guaranteed time frame. But as you were saying, Hermela, based on, somebody that has, maybe 1 or 2 items, I'd say on average, it's been about 3 to 4 months.
Okay. And if it's severe, it could be up to a year or more.
Definitely. I would say starting at about that 8-month mark and extending to about a year.
So I had a situation that happened actually a couple of days ago. This particular individual is applying for a mortgage. And he was just informed there is a $13,000 student loan on his credit. He paid cash to go to school. He never took a loan. For an individual like that, what would be your first thing that you would say?
For an individual like that, I would definitely want to confirm that this consumer owns that account, right? There has been some cases where people are experiencing identity theft and, their accounts put in their name. So first confirm that, they actually own this account, confirm with the loan servicer that they had this information on record. And then from there, is it, more about a DTI issue, meaning they need to pay that debt down? Or is it, do they have late payments on the student loans? Because student loans, honestly, are some of the greatest accounts to have just because of the sheer amount of age that comes with that account, right? So I would check to see if, they actually own this account, check with the loan servicer, and then let's see, what the issue is, whether it's we need to pay the balance down or do we need to get some of these late payments removed?
I just thought of something. It's actually personal about myself. So I have been getting severe number of calls from this company. And this company is saying to me that in 2012, I took a payday loan, which I don't ever remember getting a payday loan. I didn't even know it existed.
Yeah.
They have the last 4 digits of my social security correct. They have the last 6 digits of my bank account correct. So they literally had every information that they provided me is correct. It's my information.
Yeah.
I just simply have never, at least I don't remember. This is when I lived in Florida, right? So they're now sending threatening calls and talking about we're going to take you to court. We're going to do this. We're going to do that. And obviously I'm telling them, yeah, take me to court because obviously I want to see the documents. Then I called my bank to go back to 2012 to see if that fund was deposited. If I forgot, right? And my bank does not go above 7 years, they said.
Yeah.
So now I can't go back to get that information. So what would happen to me at this
point?
Point?
Yeah. So it sounds like maybe this could be a debt collection case, right? First thing I would do is verify with that original creditor, right? Whoever they're saying that the debt was with, I would reach out to them to confirm. Do you have my information? Are you familiar with this account, right? So that's the first check you want to do, right? Because a lot of times debt collectors are blowing smoke, right? One thing that I always tell clients to check for is there a bill of sale, right? Can we get a bill of sale from the original creditor that shows that, okay, yes, I had a debt with this company. If not, again, they're blowing smoke. Another check I would say is, where is the assignment document, right? So there has to be basically a transfer of assignment rights from the creditor to that debt collector to give them legal standing to not only collect, but also report on your report, right? If you're being sued, you're going to know, especially if it's a federal case, you can get access to that documentation through PACER. PACER, it's an acronym that stands for Public Access Court Electronic Records. So you can see all of any cases that have been filed in federal court. Right?
Against you.
Yep.
Okay.
Yep.
They've never reported it to my credit yet.
Yep.
But the question I have for you, most importantly, is there a statute of limitation?
So on average, and every state has their own statute of limitations. Sometimes it's 3 years, sometimes it's 7. I think you definitely have to look at your state's laws in terms of, okay, what is the statute of limitations for this specific type of debt?
So let's say somebody wants to get 800 credit score.
Mm-hmm.
Because, we've talked about the other side. What do they need to do?
Yeah. So 800 credit score, I always say it's not needed, but I know a lot of people want that coverage.
They want to try
ahead. It's you want to be able to show that off.
So Brian, before you say that, is it a correct statement? Because I say this a lot. Whether you have a 750 credit score or an 800 plus, what you can get is what you can get.
It's going to be pretty much
Okay.
the same.
Yeah.
Right.
See,
And we
those two.
Yeah. The only difference I can say is that, in order to get an 800, a lot of times it's just the time that you've had credit, right? All things being the same, you've great 100% payment history, you're able to manage your utilization, keep that. A lot of people are saying 30%. I would say between 1 and 9%. It's probably a little bit better. 30% is just the threshold of where it stops hurting you. And so we want to use our utilization to help us. And in order to do that, want to maintain a balance between 1 and 9%, or just pay it off if you can.
Yeah.
So I would say the number one thing, make sure that you continue to have that 100% payment history. Continue to ask banks to increase your limits. So if you have great payment history, you should be asking for a credit limit increase every 6 months, right? A lot of people have had these accounts, but they haven't increased their credit limits. So showcase that, make sure that you have a good mix. You want to have revolving and installments. So installments are usually like your personal loans, your auto loans, your mortgages. And then revolving can eat your tier 1 and tier 2 credit cards. And when I say just the different tiers, I'm just basing that on assets under management, right? So tier 1 banks, think of Bank of America, Chase, Citibank. And then tier 2 are your more regional banks. Amex, PNC, KeyBank, stuff like that. So want to have accounts from there. And then, if you don't need financing for anything, keep those inquiries low, right? That's a good representation of who you are as a business partner, right? These banks see you as a business partner when you're getting these loans, and you're getting these credit cards. So they want to see somebody that's low risk, knows how to manage their capital, and is not desperate for credit, right? And then the last thing, again, just you have to let these things age, right? In order for you to be qualified as a consumer who, doesn't have a lot of risk, you're going to have credit for a good amount of time.
Okay. Question. I have 2 questions, so I'm going to ask the first one first. Difference between soft and hard credit inquiry and the effects of it.
Yep. So I'll start with soft. Soft is usually, something that a creditor that you already have an account with may want to just kind of look and see, okay, how are they performing with the credit that we've given them, right? So they'll do that to maybe see if they're going to extend you more credit, pre-approval, stuff like that. That'll usually be a soft inquiry. Now for hard inquiry, usually if you're wanting to apply for something, right? So if you're going to apply for a credit card, you're going to apply for an auto loan. Once you get past that pre-approval for the mortgage, you're probably going to do a hard inquiry just to confirm that what's on there. So hard inquiries usually affect you about 2 to 3 points per inquiry. The soft inquiries are harmless.
Hard inquiry. Is the impact different for the type of credit? So, for example, if I was to take a mortgage, how many points would it affect?
No, it's all the same. So if you're applying for a credit card, you're applying for auto loan or for a mortgage, it's going to be the same.
And the points are about 2 to 3 points?
About 2 to 3 points.
See, for some reason, a lot of people think it's 40 to 50 to 70 points.
Yeah.
Okay, so it's just 2 to 3 points. 2 to 3 points when you do hard inquiry, when you buy a house. Okay.
Then the other off of that, like sometimes normally you hear within 30 days if somebody's applying for a mortgage, and there's so different inquiries for a mortgage. Is that considered as a one hit, or is it different?
So it's considered one hit since they're pulling all 3, but it's still going to show up as an individual inquiry on
the reduction on the point and the credit.
Yeah.
Would just be that 2 to 3 points.
Yes, it's just going to be 2 to 3 points for
If
that.
we do it within that 21 to 30 days. I say 21 days, just to
Yeah.
be on the safe side.
Yeah.
21 to 30 days.
Definitely.
Fantastic. So going to my next question. You talked about the credit mix that you would need. So I advise my clients that ask me about credit. I'm not a credit repair person, but based on what I do for myself, I tell my clients, use your credit cards and throughout the month,
Yep.
pay it off at the end of the month, and do that every month.
Yeah.
Do not spend money on your credit card that you do not have in your account.
Yeah.
So credit card is not something that is a replacement of being broke.
No, absolutely not. Absolutely not. And that's the slippery slope, right?
Yeah.
Like you said, Hermela, you're spending money that you don't have. You can't pay that off in full every month, right? And so now you're digging yourself a hole. Obviously, banks get paid off of the interest. So they want you to hold a balance so that they can get paid off of the interest. but that definitely is going to dig you a deeper hole. So I always say just budget out your bills, use that credit card to pay those bills. You were going to pay that anyway. You might as well use the credit card to potentially get some points, potentially get some cash back, get some rewards, and then pay that off with the money that you were going to use either way to pay those bills.
Perfect. Well, we would love to have your contact details shared on this podcast.
Absolutely.
And I want a discount for our clients for doing that.
Do that.
So what % discount are my clients getting, or our clients are getting, off of this podcast?
Yep, absolutely. So we're willing to give all of your clients a 10% discount on the services.
You heard that.
If they want to reach out to me, start with a consultation. They can reach me on Facebook, Brian Bracey. You'll be able to find me. You can reach out via phone, 800-699-4782, or you can send me an email. And that's support, SUPPORT, at AMTcapital.net.
Fantastic.
Fantastic.
But thank you so much for coming. I think I learned a lot today.
Thank you.
Every day we learn something.
Yeah.
Brian, thank you for coming. በጣም ነው የምናመሰግነው። ዲ ሃሪስ ነኝ ከዲ ሃሪስ and Associates. You can find me on Facebook, Instagram, and TikTok on D Harris. We appreciate you. በጣም እናመሰግናለን። መልካም ቀን።
So recap. Hard inquiry to purchase, ቤታችሁን ለመግዛት hard inquiry በምታደርጉበት ጊዜ ከ2 እስከ 3 ፖይንት ብቻ ነው ክሬዲታችሁ የሚቀንሰው። So የምንሰማው ይሄ 47 ፖይንት ይቀንሳል የሚባለው ነገር, it's not true. Brian has confirmed that. In addition, what you bank አካውንታችሁ ላይ የሚነግራችሁ ክሬዲት ስኮር እና ባንኩ ሞርጌጅ የሚያበድራችሁ ባንክ የሚመለከተው ክሬዲት ስኮር are two complete different scores. አንዱ FICO score ነው, which is የሶስቱን ስኮሮች ወስዶ አቨሬጁን የሚሰጥ ነው። ሌላኛው ደግሞ ባንኮቻችን የሚሰጡት ነው። እነሱም debt to income ratio እነዚህ የሚባሉት ነገሮች ካልኩሌት አያደርግም። Usually you said about how many points would be different between FICO
15 to 25.
15 ከ15 እስከ 25 ፖይንት ልዩነት ይኖረዋል። ባንካችሁ 700 የሚላችሁ ከሆነ የሞርጌጅ አፕላይ በምታደርጉበት ጊዜ 685 እንደምትሆኑ አስቡበት ማለት ነው። Again, Hermela Balcha ነኝ ከባልቻ ግሩፕ DC, Maryland, Virginia አካባቢ real estate agent ነኝ። Social media, TikTok, the Balcha Group, Instagram, the Balcha Group, Facebook, Hermela Balcha, and the Balcha Group. And then YouTube is the Balcha Group. Thank you again so much for being here. Bye.